Hello and welcome to this video, which will be a spreadsheet tutorial for making the spreadsheets or charts that I have made for my videos. This being the example of such. And we'll set this up. A lot of the stuff going through, pretty much everything, will be available on the web page below. There'll be a lot of big formulas that, if you choose to do this, will be better off to be copied and pasted. So let's get started. The way this is set up is I have the date in column A. I have the open, the high, the low, and the close. It is important to have the high in the D column and the low in the E column. Now the reason why I have nothing within the B is it seems whenever the dates are right before the data on the column, I can often have problems within the spreadsheets. And overall within this spreadsheet, it's almost like a car that needs so much maintenance and just mainly making sure the formulas are working and that type of stuff, which is why you have a backup within your files. So we're not going to need this data for now because we're going to copy and paste it into Gold. However, it's easier to start with it. So what we'll use is the Gold daily chart to start off with. And this information comes from freestockcharts.com. That's one place you can get stock data from. Yahoo Finance is another good one. You cannot get the Gold Fund on Yahoo. You can get GLD, but you can't get the actual gold. You can get this on Free Stock Charts under the code XGLD. And the information is in, and we can see that they got all these times in here. You can change the dates, which is what I'm going to do. I'm going to just edit the format. So we'll format cells, and we can choose what kind of date that you want. Sometimes I prefer this one, which has the month, the day, and the year. And sometimes I'll just take whatever the day happens to be. And for daily charts, that's what I prefer actually. Long term, I would rather have the date. So there we can see the periods that we need. Now for this particular spreadsheet, you need the last 100 periods, which is fairly easy to calculate because if you're at number 501, then you got to start one less the number before, which is 402. If it was 361, you would start at 262, for example. So we'll copy and paste everything up to and including cell 402. Okay, so there we have everything to that point, and then we'll copy it. And we'll put this in another area. Now I don't want to use column B like I was stating, so I can just simply insert a column. There we go. We're ready to go. We have 100 periods. That's what we're going to use. There will be a total of 83 of them that will be displayed because the last 17 periods are needed so you can calculate the 18-period average of highs, closes, and lows. Now we'll start this off within column I, and column I will gauge volatility. And to do this, you merely take the highest point, which is column D, subtract it by the lowest point, column E, and you divide it again by column E. If you want to put this in percentage, you can, but it really doesn't matter because this information is for data sets to get the information you need. And this is merely for the upper and lower bands. That's the only purpose for this volatility. You can copy and paste this all the way down to as far as you need it. There we have our volatility. Now we'll move over to column L1, and we'll write in here minimum. L2 we'll write in maximum. And in column L4, we'll put manual low and maximum low. And the reason why you want to do this is just in case there's a situation where you want better Fibonacci numbers, you can enter them in here. Therefore, the formula that we would want to use for the minimum and maximum would be, well, for minimum, it would be the following. And that is asking it if M4, which is this number in here, if it is equal to 0, then what I want you to do is give me the minimum number between C1 and F100. If it's not equal to 0, well then give me whatever it is that is in the manual below section. So we'll copy this, and what we'll do is we'll put it into column M1. Now for myself, I wasn't able to right click and push paint. I actually had to push the shift insert together after I copied it. How this works on MS Excel, I am not too sure, but this is how it works within OpenOffice, which is a free download. If I put in a different number in here, say 1225, we can see how it has switched the number. But if I switch it back to a 0, it will automatically put in that one there. Now for the maximum, the exact same logic is used. If this level is equal to 0, give me the max of C. If not, then just give me what number you decide to put in. And we'll put her in. And there we have it. Now we have the maximum and the minimum. And now what we're going to do is a front-weighted average for the volatility, and an 18-period average, and therefore we will use column J18, and within that we will put in this formula. This is available on the blog, therefore no need to write all this down, but I will explain how this works. It says equals I18 multiply 18 plus I17 multiply 17, and so on and so on. That's how front-weighted averages work, where the more recent one has one higher value than the most previous. The sum of all these numbers, which in this case happens to be 171, is what you will divide it by. Now within the volatility, I want triple the moves, so that's why I'm multiplying this by 3. So we'll copy this, and again we'll put this in for pasting. And we can put this again in percentage form, and this is not needed to be put in percentage, but if it's easier for you to look at, well then there you go. And copy and paste this all the way down to cell 100. Okay, now the big difference here is that this level is 5.83% up, which is not the same as 5.83% down on a polar opposite. For if a market goes up 10% from 100 to 110, then that's a gain of 10%. Where if it loses from 110 to 100, well then that's about 9 point something. So the formula for this is the following. 1 multiply J18 plus 1 subtract 1 divided by 1 star J18 plus 1. That will give us the polar opposite for what is needed. And there we go. Therefore, 5.83% up is the same as 5.51% down. And we'll copy and paste this all the way down again. Now what we're going to do is the front-weighted average for the highs, the lows, and the close. And for this, I'm going to use column N. And the formula for this is F18 star 18, really the same thing as I was doing for the averages. Now column F happens to be where the closes happen to be. And we can see that this is column F. Therefore, we will take this in here, we'll select it all, and again, paste this into the spreadsheet. Again, these numbers are available on the link below. and that's where you will be able to copy and paste them, and with instructions of a step-by-step basis. So there we have it. This is column N, and this is the 18-period average of closes. We can copy and paste this all the way down again, and there we have it. So now we'll do the other ones. And we see here we have E, which is the low section. So the column after that will be the 18-period average of lows. We'll put that in column O again, and we can copy and paste it all the way down, and we're good to go. Now we're going to do multiple time frames. Well, once you do this once, you can copy the entire spreadsheet to other ones. So this could be the daily chart. You can make another tab for the weekly chart, and so on and so on. Moving on now to the average of closes, which I actually mean average of highs. Again, the same thing. We're going to use column D now, and this will give us the average. And once again, it's as simple as copying and pasting everything down to here. So currently, the 18-period average of highs for gold on the daily time frame is 1835. The lows is 1781, and the close is 1807. This is as of the end of September the 1st. Now we will work within the upper and lower bands. We'll start with the lower band. And the calculation for this is we take the 18-period average of lows, which is 1498.79. We multiply the negative percent, and we add on again the low period, and there's the low band. For the higher band, we take the higher average, multiply it by the higher percentage point, and again simply add through, and there's the upper and lower bands ready for us. Now we need Fibonacci. And the Fibonacci will resonate from these levels and up here. Therefore, the mathematical formulation is you take the high, you divide it by the low, and then you have two calculations, one which is 38.2%, one which is 61.8. We'll do the 38.2 here. And then we will multiply this by the low again, which gives us one number at 1609, and the second one, and same thing as the last one, but the only difference, of course, this one is 61.8% rather than that of 38.2. Now I really can't copy and paste this down because that's going to create a problem, as you'll see in here. A bunch of divos. The easiest thing is just to tell the computer or tell the program on cell 19, whatever's in 18, I'm going to put there. So Q19 is equal to Q18. There we go. And R19 is equal to R18. There we go. We now can copy and paste this all the way lower. Now we can start to make the charts that we're going to need. We're going to want to have a candlestick chart, and we're going to want to have the lines. Now I wish I knew a way where I could put the candlestick analysis with moving averages and such. Instead, I have to crop two together. So if you know a better way, then by all means, if you got a better way, please stick with it. But what I'll do is I'll highlight these cells and I'll click on a chart button, which will bring up the chart. And this is the candlestick chart, so I'm going to click on stock, and I'm going to pick on this one in here, at least on the free one, which is Open Office. It's the second one, and a chart will come up on the screen. So we'll put this on the bottom part, and what we'll do is we'll make it so it's viewable. We don't want a lot of these different things in here. I like to take a lot of these lines completely off. Maybe make this a little bit bigger. Now my choosing is 8 by 4.5 because that makes it so it's available for widescreen viewing. Next up, I'm going to set up the scaling, which is a complete manual thing for me anyway. We'll do 1400 as a low. I choose logarithmic. Within this, I just put a big decimal, and a bunch of different numbers are going to come off. Position is on the outside end. The numbers will make sure there's normally 2 decimals, but with gold and the amount of dollars I got, I don't need any decimals whatsoever. I could put a 1,000 separator if I wish, and I'll choose to do so. I could play around with the fonts a little bit. I like to have the numbers lower, so I'm going to keep the font at 8. And we'll keep it Arial, although a lot of times I like to just play around with different numbers. Alrighty, so now there's way too few numbers on here, so I'm going to change this from 02 to 01. That's a little bit better. Now, this doesn't really need to be logarithmic, but really there's not much of a difference with logarithmic and linear when the numbers from top to bottom are really kind of small. But when they're big, they really should almost be logarithmic. Now, one of my pet peeves for stocks is that I like to see the open where the close is. And the pet peeve is even bigger because you can see markets just totally gapping up and lower. Well, that should mean the market's closed if the market is closed. Now, I can get around that by just on sell C100, say whatever the close is, I'm going to put that there. And then that should make it look a little bit better. And I'll copy and paste it a few cells up. And then that makes it a little bit better. You can change the coloring in here. So make this red. And again, we'll make this red. Give it a smaller width though, 2 or 1. 2 is fine because it's not a small chart. The smaller the more candles they are, the smaller the width should be. So if I'm putting like 300 candles together, I'm going to want that as 1. But this is only 87 though. So there we go. We got the green and the red candles in here. And next thing that we're going to need is some more of these lines that are taken away. Because I don't need all the lines. And as far as the dates are concerned, that's column A. So within the data range, I need to put in the data series under categories. And let's put in column A for this. And there we have the dates. I'll put in a tile so that we only see a few of them. So there we have the first one. Now we're going to want the moving averages now. I'm going to copy this chart and paste it right below it. Got the exact same chart, but this time what I'm going to do is I'm going to first change it to a line because this is going to be the one for all of the Fibonacci and all that stuff. And well, the Fibonacci is from columns here, which is L, all the way to R. So I'm going to need L to R. So let's do the data range and switch it up. We'll change the C to an L. We'll change the F to an R. And there we have it. Now the coloring will need a little bit of work. We'll start with the Fibonacci lines. I think they're fine as a black color. And I like all my width at either 1 or 2. I think 1 is the one that I'm accustomed to. That wasn't black. That was gray. It says it's supposed to be black. Maybe it's supposed to be a 2-point font. Let's put a 2-point width in instead. Yep, that looks a little bit better. And I'm just double clicking on those to bring those up. Now the 18 period average of highs, lows, and closes. I've been using the blue color. I think it works well. So we'll put a straight line for the high, straight line for the low. And then I use a special different kind of line for the middle part. And what we'll use is this. Obviously, we'll keep the colors all the same. And if you like a different color, pick what color you like, but get creative. Maybe you don't like the red and green candles. And there we got the 18 moving average with a fine dotted instead. And then for this one in here, which is the lower band, the color I've been going with has been a red one. And then green for the top part. So we'll make this red. We'll make this green. And here we go. Now we can just take this image. I copied it. And now when I take this, I can just simply push the paste button. And then find the bottom and just match up the 2 points as best as possible. Now they're not matching up, it's just telling me the top parts are different. So let me delete this and make sure the scaling is fine. There's a bigger difference in top to bottom in here. So let's just see what the top here happens to be. I want even more numbers. Let's just change the scaling to 007, sort of like a James Bondish, I guess, and we'll make this 2100 top. So 1400 to 2100. And we don't even need that. We'll do 2070. 1400 to 2070. Which means we'll have to do this exact same scaling here. And then we'll do 007 again for the interval. And now we'll try to match these two up. And there they match up. So there we have it. We now have the lines matching up perfectly with the price action. Therefore, within this chart, what we can see is that it's on this level. We were at this 18 period average for a little bit, consolidated there in July, got up to this upper band, came down to this line, which we didn't know at the time would be Fibonacci until you hit this. You could have said maybe it would be. And if you did, you were right. And then comes right back down to Fibonacci and this band. That's where it's currently moving towards. Now, I don't know what day I'm uploading this. Definitely at least the Friday session. But on the Thursday night, as I'm doing this, this tells me, you know what? She really wants to get going. Okay, this has been over 20 minutes. So I'm going to end part 1 at this. I'll probably do one more part. And that will be moving on to multiple different time frames. So thank you for tuning in and take care.